Audio check. Testing audio. 1, 2, 3. Audio check. Audio check. Testing audio. 1, 2, 3. Audio check. right, good morning again. So as we greet the open, it's really just the same situation as during Strategy Planner, and that is, while yesterday afternoon's congestion and narrow ranging, just unable to get any kind of a rubber band stretch capable of snapping out of this ongoing, almost narrowing range, overnight is trying. It's already probed basically either end of the range. This may look like it's above the lower end, but actually it is under the lower end of the tilted range. So it's expanding. We'll see if that translates into anything or transfers into the open. Remember, the first 15 minutes of the regular trading hours, 9:30, 9:45, is a handoff from the overnight to the intraday. So whatever pattern the overnight action wants to transfer to intraday action has to be performing, actually gaining traction of some sort by 9:45. For this, that means a fresh high. Exit the first 15 minutes at 9:45 above overnight highs, at least above these recent overnight highs, if not the earlier overnight highs. 3-minute chart on the left, 1 minute on the right. And we'll give buyers every benefit of the doubt for being, at least until disproved, interested in trending up, not facing opposition. And the same thing goes for the downside. At 9:45, this overnight action becomes invisible to the intraday. But before then, a dip into this uptrending pivotal support would be a sweet spot. There's also a little measurement in here. Comes in around 73.50, 74, up to 75. Under 73 starts pointing down back into the range. So initial strength, still need to get out above 88. Just start testing or probing 85, 85.50, and we'll give buyers the benefit of the doubt on that. But nothing to do right here in between them. There's no momentum, or at least no indication. But any questions, let me know. I'll start marking it up with any movement out of this range at the open. And then at 9:45, we'll see what remains. Good luck today. So as we greeting the open, the sweet spot of resistance, probing of fresh highs, is being challenged here. No delay. So this setup goes away. Had there been a dip sufficient to test this pivotal uptrending support, that would have been compelling. We don't have that in this case. So a reaction down. Maybe we'll re-engage, see what the timing is. Right now, the open is testing relevant resistance, is the takeaway here. How to apply that? Depending on what kind of trader you are, the more aggressive, the faster action, both in and out, by the way. If you're trading the open at all, you're probably scalping. You're not positioning for the day. So the inflection points can be very helpful in identifying when they're immediately actionable. Upon first contact, that means I would anticipate multiple points. That doesn't mean it's sustained, but it is a very relevant resistance. Is recovery upon being probed for minimum 4 ticks, and then starting a countdown of 4 minutes, whatever the 4-minute high is. If that's exceeding that 4-minute high would represent reinforcements. So we're basically establishing a 4-minute high. We're only 2 minutes into the 3rd minute, so we can't possibly have established a 4-minute high yet. So far, the 4-minute high being worked on is 56.90.50. Let's see, 4 minutes don't need to be spent above the inflection. Once the countdown begins, 4 minutes later, we reassess what was the extreme, in this case the high of that buy signals test, 56.90.50. Then anything after those first 4 minutes above that 4-minute high would represent reinforcements. If you're an aggressive trader, maybe you're already in and out, or maybe you're managing an entry. If you know this is a relevant resistance and there's an attempt being made, but there's 4 minutes during which the market might fluctuate around that inflection before resolving up, potentially. Use those 4 minutes while the signal is being tested to manage an entry. Or if you're trading multiple units, start deploying buy on a probe above the inflection and on a reaction down, or 2 or 3 minutes after first probing. So it looks like the 4-minute high is going to be even higher. That's a higher threshold for reinforcements to be signaled. 4-minute high currently almost 56.93. Add to that a 1 or 2 point buffer room for noise. Depending on how aggressively you want to trade the market, the single inflection point combined with price action around it, overlaid with a timing window, a dynamic window that starts its countdown as soon as that inflection is pierced by at least 3 or 4 ticks. 4 ticks during the first hour, 3 ticks any other time of day. Establishing a 4-minute high. 4 minutes during the first hour, 3 minutes any other time of day. But that's not arbitrary. That is the usual attention span of weak-handed counter-trend sponsorship. So we don't know until that 3 or 4 minute high is exceeded And we don't know the 3 or 4 minute high until 3 or 4 minutes elapse. But where or whether reinforcements are even going to arrive, or if this is just holding a test of overnight highs, or the bias up signals resistance, or some prior highs I'm about to show. But tactically, an aggressive trader might already be in and out, or even before establishing a 4 minute high, already start deploying a position here, add to it there, have a buy stop on a fresh high above the 4 minute high. Always prepared for a whipsaw right back out. The more aggressive, the more productive those first 4 minutes, the usual attention span of weekend to counter trend sponsorship, the less likely that reinforcements are going to arrive, the likelier that it becomes an extreme. So let's just stop and assess for a moment. We've established a 4 minute high to testing the signal. We've also probed the overnight high. Exiting the first 4 minutes, or exiting the first 15 minutes, the first 15 at 9:45 above the overnight high, that in itself is a bullish signal. There was no requirement to even probe the overnight high. Now the overnight high has been probed during the first 15 minutes. It better be exited above it. If that window lapses at 9:45 and it looks like this, having probed the overnight high, probing the overnight high, but not exiting that window above it, that would be bearish. That would be passively bearish. And then finally, we have a level 5692 that I focused on yesterday at the close, or yesterday afternoon actually. Any break higher had potential for a detour up to 5692 before resolving back down. It's not as required as it would have been yesterday to resolve back down from 5692, but notice that it's been touched. Definitely productive, definitely attracted buying pressure, but at 9:45, the end of the first 15 minutes, which we're halfway through, at 9:45, unless the high of this test of the calculable resistance, the overnight highs, and now also 5692, unless all of that's been exceeded as of 9:45, this may be an extreme meaning that price heads back down. So if you look at the 3 minute chart, these green and red lines are the bias signals. They're labeled bias up and bias down. That means as of 10:15, entering the AM bias window at 10:15 above the bias up signal would put into play its target. It would also tell us that the rest of the morning intends to absorb dips, if any develop. Now having tested, we didn't even have to test the bias up signal. There's mornings, opens, first 45 minutes that pass by without testing either bias signal. The bias signals are calculated at the prior session's close. These are not informed by overnight price action, just from price action through yesterday's close. If having tested the bias up ACE signal, in this case the bias up signal at 10:15, if the bias up signal doesn't trigger at 10:15, that would be a reverse bias, putting into play an offsetting test of the bias down signal. Buyers didn't have to test the bias up signal. They didn't have to bring that much buying pressure. But if they're going to, they better attract reinforcements, because otherwise the consequence is offsetting test of the bias down. So we've actually got, depending on your degree of aggression in your own trading plan, how aggressively you trade, we've got several different tactics that can be employed. Now that the 4 minute extreme to testing the inflection has elapsed. We've got a 4-minute high up to 92.50. We've got a detour back down. While waiting for that high to be exceeded, there's room to fluctuate back under the signal, back under the inflection point for 4 minutes. Anything in that range is just a test of this buy signal. This price at 92.50, this price at 81, they equal each other. They equate to each other. They're not the same price, of course not, but they're both in the same range. Every price in this range is as meaningful or meaningless as each other. Until we break free from that range, we're still in it. Whether we're at the lower end or the upper end, we're still in its range, waiting for the 4-minute extreme to be exceeded, waiting for the 4-minute high to be exceeded because reinforcements have arrived, or waiting for the low to be exceeded because this was a false break, because the buy signals test held. If we slap on a 1 or 2 point buffer, room for noise beyond either end, depending on how aggressive you trade, maybe you'll wait for that buffer to be exceeded. But we're now 2/3 of the way through the first 15 minutes, the handoff from the overnight to the intraday. We've got 4-minute extremes on either side. We can get actionable level on a sell signal. Back under 56.80. Under 56.80 is so deep that it's no longer overlapping the inflection. And potentially even reversing momentum down, especially as we get through the first 15 minutes. And everyone is free to do what they want to do, when they want to do it, however they want to treat the levels. But as far as the levels go, under 56.80 is a sell signal. And it's an inflection point just like this was an inflection point. The countdown starts again, just applying it to a different level. Up here, we're trying to see what the first 15 minutes intends to, if it does, intends to tell us about the session. But now as we get through the first 15 minutes, and so far removed from what would be bullish, recovering, if you see this inverted head and shoulders type of correction or pattern. I call it a pivotal correction. Take the left shoulder to the right neckline. 61.8, 100% projection from that. These are relevant levels. And if this overnight pattern intends to influence the intraday, then it's going to, its projections, its Fibonacci projections are going to be able to influence post-open price action. But more so, being an inverted head and shoulders, we're going to have to get out above its 61.8, which happens to have coincided with this inflection back above 56.88, just to indicate that reinforcements have arrived. I don't see that happening here. It's already 1 minute to go for the first 15 minutes. So the market hasn't even told us what it wants to do, what its intention is for the morning, let alone the session. And we've already had 2 big scalps. The levels are the levels. Different tactics for trading them, depending on what your own trading style is. And then also, Contextually, we know that no reinforcements have arrived. It's just been a bunch of noise. But the levels are the levels. Let's go ahead and call it at the first 15 minutes. Buyers didn't need to be so impatient as to probe above overnight highs, but they did. Since they weren't restraining their optimism, which can be bullish from a contrarian perspective, instead they were so optimistic they scared away reinforcements. They didn't attract them when it was needed. It's passively bearish. Actively bullish would have been to exit the first 15 minutes above overnight highs. Passively bearish is to hold a test of overnight highs. Probe the overnight highs, but as 9:45, when it matters, to have reversed back under the overnight highs. Passively bearish. So now we have a new inflection, 5680. I run through all the calculations and label. Traders are able to just focus on their own actions. Fluctuating around 5680 until the 4-minute low is exceeded by reinforcements. There's a time frame of 4 minutes of counter trend detouring that's allowed. So it's too late to exit the first 15 minutes bullishly. The first 15 minutes have elapsed. No relevant support was broken, so sellers aren't yet gaining traction for their efforts, but impatient buyers that didn't attract reinforcements were isolated when it mattered. Let's see what happens to them here. We're still in the 4-minute window of testing a sell signal. It doesn't look like a test. Not this far removed. But this is 4 minutes of the usual attention span of weak-handed counter trend sponsorship for all we know. It might not be, but we're not trading on might nots or mights. Since right now there is a test, the market's memory in the last 4 minutes is testing this sell signal, fluctuating around this sell signal. That's the market's perspective. Might not look like it, but that's the market's perspective. When we know where the 4-minute high is, it might be compelling to step in front of, to sell. We're still waiting for the market to tell us what it intends to do. If you're trading the levels, if you're scalping, I'll have another level momentarily. Now in this case, the 4th minute of fluctuating around the sell signal, 4 minutes to establish a low and a high. The 4th minute is the high. Maybe not right at the 4th minute exit. Maybe it gets back to the high. But if this is just the usual attention span of weak-handed counter-trend sponsorship, a knee-jerk reaction to a headline is weak-handed sponsorship. And not just because that's who responds to headlines, but also because strong hands are patient. They step back. They let weak hands muddy things up. And then when that attention span lapses, that's when stronger hands step back in. So we're establishing an extreme. Again, fluctuating around 56.92, which is resistance. Maybe we even get to the bias up target by then. And this is even before the bias parameters play. The bias parameters are always going to be influential, as you can see. but they're not predictive until 10:15. At 10:15, if the bias up signal remains exceeded, then bias up is triggered for the balance of the morning. Having tested the bias up signal, if at 10:15 price falls back under it, that would put into play an offsetting test of the bias down signal. So that's predictive. But they can be influential, meanwhile, just as support and resistance. So there's a 4-minute high to test data fluctuating around 80. This is a attractive short entry. It might not look like it because it's a fresh high, because it's above overnight highs. We just know from timing, and it may prove unprofitable just up front to make sure that's clear. This is not assured of extending higher. But the time to have exceeded overnight highs to be bullish was as of 9:45. But as of 9:45, a test had been held. That sponsorship, if it were going to try, needed to have attracted reinforcements, and it didn't. So this test is a little late. It's now relying on maintaining the recovery through 10:15, so it's got some time here. The reason why this is an attractive short is because it's so close to where we know it's wrong to be short. This is the 4-minute high. This is the usual attention span of weak candid counter trend sponsorship. It doesn't always have to be spent trending higher and higher. The first couple of minutes might have probed higher, and the other 2 minutes reacted down already. It doesn't matter. This is the 4-minute high. 1 or 2 point buffer, room for noise. I've got resistance in here at 97. So all the way up to 97 is an attractive short, not because it's any likelier to resolve down. It's actually not any likelier to resolve down. And just to point out, because of that opens range, I can raise the sell signal or add a sell signal at 87. No, the reason why this is attractive to short isn't because it's any likelier to resolve down. It's because it's so close to where we know it's wrong to be short. Now, this is a pretty fast-moving window, the first 15, let alone the first half hour, even the first hour. So it's just as attractive or just as useful to sit back and let the inflection points be tested and establish their 4-minute extremes. And maybe hold, maybe attract reinforcements. But this would be an interesting reversal. 4-minute high to fluctuating around 80. 1 or 2 point buffer, room for noise. But you have to be willing to take the stop. If this is your first exposure to viditrade, to this tactic, which I'll be describing in detail all day, if this is your first exposure to the tactic, it's much easier to process, to just watch, but you have to be willing to take the stop. You have to be willing to be stopped out right here. You can re-enter short. At this point, back under 56.93. I mean, this might just be noise and may just be part of the business of getting whipsawed out. If that's the case, that needs to be rejected much, much sooner rather than later. But back under 56.93 would start to indicate that, and that's not going to happen, obviously, would indicate that sellers had absorbed that. And I'm sorry, let me get back on track here. Let me just run this down real quickly. If you are new to viditrade, this is definitely utilizing some more advanced information. I'm busy describing the setups and not really identifying the trending here. I will say this developed so late that we're going to come back to this later today and assume that this might be retraced entirely. There's going to be an attraction below as late as this developed, as the first 15 minutes had tried to break and failed. Remember the passive bearish behavior? It doesn't prevent this. I mean, clearly it doesn't prevent this, but it gives us the insight. Not useful right now, but potentially later, to know that this level wants to be retraced. 5688 wants to be retraced at some point. And as long as we're just observing, waiting for something else to set up, let me repeat or detail a little bit further. The risk to reward that I was describing, or the reason why selling 95's retest, the reason why that was any more attractive wasn't because it was any likelier to resolve down. It was because it was so close to where we'd know it was wrong to be short. Often that's going to be a stop and reverse to long. I just don't have that labeled, so I'm not tracking it right now. But I will track a pullback limit. So another inflection under 99. All inflection points are the same. They have the same meaning. As soon as an inflection point is probed by 4 ticks, there's a 4-minute countdown. That's during the first hour, 3 ticks, 3 minutes, any other time of day. During the first hour, probing back under this thick red line is the same thing as probing the blue line. It's an inflection point. It starts a countdown. Usual attention span of weak-handed counter-trend sponsorship is on the other side of that burst, whether it's a short red line, short green line, short blue line. Different colors for different applications, but they are all inflection points, and once they're pierced by at least 3 or 4 ticks, they start a 3 or 4 minute countdown. And that's the usual attention span of weak-handed counter-trend sponsorship. I'm going to shift gears for a moment and just talk about the bias parameters, the 2 green lines that you see, or the 2 red lines. Bias up, bias down. Their resistance and support tend to be influential. The market responds. But until they're exceeded or not, until they've held a test or not been tested as of 10:15, they're not predictive. Right now, it sure looks like in 15 minutes, if the bias up signal maintains its recovery, this is going to be a bias up window, putting into play a test of its target. Actually, if the target is already met and exceeded at 10:15, that renews the bias up, putting into play a test of the next higher target. Until 10:15, I've got a sell signal that would trigger back under 97, 96.75. Let me minimize this. But once we get into 10:15, if sellers aren't retaking control, it's a bias up. So as we get closer to 10:15, I'm going to give buyers a bigger benefit of the doubt on any fresh high. So above 650, we're getting so close to 10:15, buyers will get a benefit of the doubt. If you're scalping, that means on first contact, potential for multiple points, no requirement for it to be maintained. Could do another head fake, just like this initial buy signal did. There's nothing specific to the delay that's predictive, other than we know the clock is counting down to 10:15. And at 10:15, if the bias up target remains exceeded, it's a renewed bias up environment. If sellers intend to take control this morning, then they'll need to start doing so quicker than this, and they're not. Raising the pullback limit to 57.03. So once again, sitting right at resistance. If you knew nothing else about the market, the timing windows, anything, but you know you're sitting right at resistance, you're ready to buy perhaps, but this may, at the same time, this may be the extreme because this is resistance. Without knowing or having an opinion as to whether this intends to resolve down or up or flatline, what's the most attractive position to take if you have to take a position? And it's going to be short. Because you're so close to where you know it's wrong to be short. Your loss on the stop is going to be limited. As limited as it can be by getting in as close to where a stop would be meaningful, not arbitrary. Add on knowing the timing that at 10:15, if the bias up signal is exceeded, the next hour is biased up. Or if the bias up target already being met, if that is exceeded, it's a renewed bias up, same meaning. Raising the pullback limit to 450. So alternatively, not only selling at resistance, which a buy signal is, that's why its recovery would be so relevant and productive, because it's resistance. So not only selling that, not only stopping out above it, but reversing to long above it. And I'm a little slow. We had the label on here. Sorry, I deleted it earlier, but same thing. We had the head fake down to 56.80, and it totally exploited its first 4 minutes, already recovering back above the original buy signal. The one thing that's lacking, the one thing that's undermining this behavior, the behavior is incredibly bullish. The one thing that's undermining it is the timing. Of course, it's going to behave as, or be as steep as possible, because its sponsorship is presumably weak-handed. Doesn't look weak-handed, not from this vantage point. Pretty productive, pretty substantial. It's outweighing the range, yesterday afternoon's entire range. Even the overnight range is being equaled in this brief window. So it doesn't look like weak hands. Weak hands is not a function of the degree to which price moves, but how quickly. It's not just a matter of buyers pushing, but sellers not pushing back hard enough. And if sellers are strong-handed, they're being patient. They're letting buyers push price to a more attractive level. And the only way we have that insight is to add the timing window. And knowing that the first 15 minutes tried and failed, that's where strong hands are. That's where they're going to reinforce, and as of 9:45, make sure that that break higher is successful, or not even try. Be patient and not even try that. Buy that window. In this case, they tried, they failed, so it's difficult to visualize this. This is basically a double top. It's not very useful information at this stage, since we've got a bias window that's going to be biased up. But something to be cognizant of, just put in the back of your mind or label on the chart. The market wants to come back down to this level that it tried and failed to break on a timely basis. All right. Exceeding the latest inflection Going to raise the pullback limit again. 57.09. So I'm assuming that as of 10:15, the bias up signal all the way down here will maintain its recovery. And this morning, the next hour through 11:30 or noon will be a bias up window. That can be invalidated at 10:30. If at 10:30 prices suddenly plunged back under the bias up signal, then that will invalidate what's being triggered cleanly at 10:15. That's the bias itself is not as helpful when it's already being exceeded. Even when the bias up target is being exceeded, which renews the bias up. In the blog, this is what the blog post looks like. Now that it is 10:15, the status becomes renewed bias up. It's a bias up because the bias up signal is being exceeded, but renewed because the bias up target is being exceeded as well. And that applies to the next 60 to 90 minutes. That above 56.86 would have targeted 98. Above 56.98 is a renewed bias up. Here's the rules. If you're in the blog, if you get the email alert, this is already expanded, but you can read through the rules. As of 10:15, exceeding the bias up signal would have targeted 98. But also, not exceeding the signal would have been a no bias. And if one of the signals had been tested but not triggered, that would have actually been a reverse bias, putting into play an offsetting test of the opposite. There are other permutations and other bells and whistles here. The only one that's left outstanding here is that at 10:30, if price reverses back down through the bias up signal, that will invalidate the bias up. Otherwise, during this next hour, we anticipate that dips hold or recover, and that potentially price extends. It's not a trading tool, it's a contextual tool. There are, in some instances, not this one, there are some setups that can be informative to actually getting a trade off. So we looked at the inverted head and shoulders pivotal correction that had developed pre-open. If that were going to be influential intraday, then it needed to have produced something relative to it as of 9:45. Here's the Fibonacci scheme of its objectives. Its minimum objective of any head and shoulders is going to be the 61.8 projection, the left shoulder to right neckline, 61.8. That was already met pre-open. Post-open tested it and its next higher Fibonacci projection, which was not exceeded as of 9:45. The 61.8 was, but not the highest it had been tested. But if this pattern intends to continue being influential, just needed to exceed the 61.8, which it did, and that kept alive potential if this wanted to extend higher to the 161.8 and the 261.8 projections. It's done both. (61.8s) are a very popular Fibonacci projection. 61.8, 161.8, 261.8, the 38.2 inverse counterpart. Most moves can be bisected by a 61.8 or projected out to a 61.8. But here, a lot of buying pressure is being satisfied at the high, not coincidentally. Just to be influential. Get through 57.1350, and that doesn't just indicate higher highs are coming. It would indicate that this leg is basically doubling, tripling. Probably not in this particular instance ahead of FOMC. So meanwhile, if that's resistance, such big resistance, and this is a bias up window, and we've basically traded straight up, we're probably doing a lot of lifting here. But usually, we're going to anticipate that resistance is going to trigger a pullback, and in a bullish window, that the pullback recovers to a higher high. So the question is, pullback from where? We've answered that. This is a candidate. Multiple different projections coinciding at what happens to be the high that is being responsive. Candidate for a pullback, 56.99, 96. So whether to 99 and then recovering, or to 96 and then recovering. Where does that begin? At this point, the pullback limit, again, inflection point, 3 or 4 minutes probing under it. 1 or 2 point buffer, room for noise, under 57.0425. Under 57.0425 would target 56.99 or 95.50. So one more point to make about the price action, what it's telling us. One more thing about the Fibonacci projection, the maximum Fibonacci projection of 261.8 off of that inverted head and shoulders. I just described one way to extend the rally, and that is correct it a little. This has been straight up, very nominal reactions or consolidations along the way, so some sort of a refueling can help. There's two ways to refuel. One is the traditional retracement, retracing the leg. The other is just to pause. High and tight, for instance, form a flag or a pennant, and then break higher. So after a while, after now having tested the pullback limit, if you can see that pullback limit in here. It's already been tested for 4 minutes and then some. So after creating so much overlap, congestion, again, forming a flag or a pennant, just breaking higher, just breaking through 57.1350 can be a new buy signal or indicate that the rally has resumed. I'd consider being or tightening, lighten exposure perhaps, tighten stops. You can always re-enter long on a fresh high. Under 57.0425, I expect 99 and maybe even 95.50 to be met before resuming the rally or returning to the highs at least. Give this a couple minutes. I'll be right back. So you can see from the pullback that there's, coincidentally, the resistance at 57.1350, 13.25. These are based on the inverted head and shoulders pivotal correction pattern, the opens first swing. 61/8s are going to be most influential, and when they are, there's some adherence to that, to those patterns. We can start to build on that. We recognize templates of how those behaviors tend to further progress. But two things I want to point out here. One is, recall from the open, the timing. You don't know this just glancing back at the chart. It helps to have been here processing it in real time. But if you have to go back and look at the first 15. Look at the AM bias window. PM bias window. We'll see certain behaviors then, especially today with the FOMC behavior, the FOMC events falling in that window. But overlay those time frames, and you can see what happened between 9:30 and 9:45. There was a test of prior highs, and as of 9:45, it wasn't still being overlapped, it wasn't being exceeded, it was holding. Price had reversed back down. This is a position of weakness, suggesting that whatever this rally does, it's going to fail. That it's going to, at some point, want to revisit 56.85. The inflection that was being tested during all of that. The singular numerical representation of that test. It doesn't prevent a bigger bounce, obviously. But just know the context. Maybe that'll be delayed until the FOMC reactions. It'll be very useful then. But meanwhile, there's the resistance being responded to. Being a bias up window, we expect a likelihood at least of a fresh high. Whether that's just to retest the high or to extend. But first, need a consolidation, maybe even a pullback. If 57.04 doesn't hold, 56.99's a candidate, or 95.50 for producing that bounce back to the highs, if not through it. Could have already resumed the rally back above 57.10, but that's off the table now that we've dipped this deeply. Testing this inflection, his break would target 99. So that was one thing. The other thing is, this is getting closer to FOMC. This sentiment, it is a sentiment. Even flat is a sentiment. In this case, this optimism, from a contrarian perspective, is potentially bearish. It's not a sell signal, and it doesn't prevent an initially favorable knee-jerk reaction to FOMC. But it does make it more difficult for FOMC to surprise positively. The market's already anticipating a positive influence or positive catalyst. It's already pricing it in to some degree. But not a lot to do otherwise. I mean, we're sitting right at support. Can take a stab at getting long this, or start accumulating. Next opportunity to accumulate, to consider adding, would be on a test of 99. Or wait for a dip to 99 that bounces back above 57.0450, 57.05. Different tactics based on different trading styles. But the levels are the levels. I'm going to move these out of the way here. So, first refueling candidate being tested down here at 57, all the way back down to 56.99, overlapping it a little, but that was the candidate for a pullback. The initial candidate. Potential even deeper to 95.50. This could be considered a sweet spot of support to try and buy in this area, or if there's a fresh low, to add on its recovery. So many different candidates. But these are the levels that are going to be influential. Attractive, responsive, and their disposition, how are they dispensed with, that's going to be predictive as well. Now I've identified 57.05's recovery as suggesting that the rally has resumed. All right, so there's basically a sweet spot of support. Having extended down to 96. The bounce limit is 99.50. So we've been dealing with red pullback limits, green bounce limits are the same thing. They are the same thing. They're used the same way. They can be probed for 3 minutes, 4 minutes during the first hour, but 3 minutes, minimum 3 ticks to start the 3-minute countdown, 3 minutes to identify a 3-minute high. Anything higher is reinforcements. So the sell signal is being productive, and its 3-minute high has yet to even start counting down because it hasn't been pierced by 3 ticks. That would need to be exceeded before reinforcements would tell us that's not counter-trend sponsorship. It is actually reversing up. But I happen to have a pattern that suggests this is the pullback's low. We happen to have the bias environment telling us pullbacks are likely to recover. We happen to have the bias up targets support. So Don't need to wait necessarily for all 3 minutes to have elapsed. So the measurement for this pullback, for the candidate that would be able to resume the rally or at least recover back to the highs, the candidate is 56.96, 95.50. It's being overlapped. So long as it's being overlapped, it's only being tested. Being tested pretty hard, but so long as it's being overlapped, it's only being tested. Still a candidate for a low. There's nothing optimal or suboptimal about it. Preferable if we're going to buy for it to start reversing up 2 seconds later. Room for noise down to 92. It's going to be tough to recover from 92. So long as bounce limits are holding, and this is 75. Bounce limit of 96.25. If your trading style is to wait for price to reverse, the trigger for that is back about 5,700 half. And I'll lower that again if possible. right, the blog is updated. Some pretty deep testing. There's been some pretty deep testing of the 96, 95.50, 96 area. So back above 5,700 plus or minus. Back above 5,700 plus or minus would be credible for probably not being recovered unless the pullback is done. If the pullback is done, the reward is to retrace the origin of it. That's the high. Just looking for the reliably predictable, a lot of predictive behaviors in the market to varying degrees. The more that align with the same outcome, the more reliable. one of the most difficult aspects of trading, I'm already taken care of for you, and that is identifying levels, identifying behaviors. After that, the really difficult aspect of trading is patience. I don't have any control over that. I can keep pointing out the levels and the behaviors, but until you see them repeated constantly, as I have, it's understandable that there might not be confidence to hold in anticipation of a resolution or to pull the trigger on a stop when the price action tells us that's most prudent. But this is one of those instances where patience pays off. You don't know it right away, and that's the whole point of patience. And it's really tested by these lower and lower lows. But so long as the relevant level is being overlapped, it's only being tested. And so long as it's only being tested, it's holding. And when we look at this in the context of likely outcomes, try and imagine what the chart looks like looking right. We can always look left. Looking left doesn't always tell us exactly what's coming when we look right. In other words, what hasn't yet developed. But it narrows down through a process of elimination likelier outcomes. Just because this sort of behavior holding up through 1015 above the bias up parameters, renewing the bias up, that doesn't happen unless the next hour, price intends either to extend higher or absorb dips. So, totally separately, we had a Fibonacci projection, a couple of them, that told us a lot of resistance and buying pressure being satisfied at the high suggested a pullback. So if we'd extended higher, that would have been credible. But otherwise, we're looking for a pullback. And we're looking for that pullback to recover. We already know that in advance, not from the measurements, but because of the timing. So then it's a matter of locating what are the candidates for the pullback. We did that. Now this hasn't completely played out, and it might not. This is the dirty little secret about the market, is it doesn't move to targets. It's attracted toward targets. It may never get to a target. But it has in its own collective mind at times, the herd mentality is focused on a similar direction, maybe even a similar extreme. Pullback limit is 5703.75, 375. And maybe that attraction or objective is too shallow. But once we get further removed from an extreme, if price can turn, which we assume it has turned, then the attraction becomes that much more powerful. The further away it is, the more powerful the attraction. Counterintuitive. That's because to get far removed from that extreme has to satisfy a lot of selling pressure. Expend a lot of selling pressure, satisfy its attractions below. So far, it looks like price is trying to reverse up. The likely reward is to retrace the origin of the pullback. Right now, this is a 61.8% retracement back to the high. That's going to be naturally resistant. A challenge. It's a reason to consider tightening stops, maybe lightening exposure, depending on if you're trading multiple contracts or units. All right, so until the pullback limit is probed by at least 3 ticks and then 3 minutes later to establish an extreme that we'd know any lower was reinforcements, not just a pullback. Until a pullback limit is probed to establish its extreme, the usual attention span of weak candid counter trend sponsorship, I can't identify a sell signal. I mean, I can identify levels that are relevant to support right now. 60 or 56.95, 50 is a relevant support. But I'd like to get tighter as far as that being an actionable sell signal. $61.8 retracement back to the high. That's the attraction. That's the candidate for rewarding buyers that absorbed this dip. A reason to tighten stops, even lighten exposure because of that 61.8. We can have a 100% degree of confidence that the high intends to be retraced entirely. We might be entirely confident in that. That doesn't mean it's going to be a straight shot higher. So here's a pullback limit. During the first hour, we would look at 4 ticks and start a 4-minute countdown any other time of day, like now. Minimum 3 ticks starts a 3-minute countdown. The usual attention span of weak candid counter trend sponsorship. If price wasn't able to just plow through the 61.8 retracement, this is correcting, it's refueling. That's the bullish scenario. It may be that the bearish scenario takes over. The bias window is in view of lapsing. Starts lapsing at 11:30, 10 or 15 minutes out. It's in view of lapsing. The bias up may lapse before it gets a chance to influence a bigger recovery. But right now, coming to the end of those 3 minutes, all 3 minutes didn't require being developed or developing under the pullback limit. But since all 3 minutes did, we happen to be sitting at the low at the end of those 3 minutes. Add a 1 or 2 point buffer, room for noise. And this is an attractive long. It's the usual attention span of weak candid counter trend sponsorship. Don't think in terms of price. Think in terms of time. Could be several ticks of a pullback in those 3 minutes. Could be several points. Several dozen points. The usual attention span of weak candid counter trend sponsorship is the constant. And that's about 3 minutes. So 3 minutes and then a 1 or 2 point buffer, room for noise, whatever the low of that 3 minute window is right here. It's not any likelier to recover, not for that reason. There may be other reasons why this is likelier to recover or not. It's just that it's so close to where we know it's wrong to be long, to buy this dip. And if the 3-minute low at 98 and a 1 or 2 point buffer room for noise are exceeded, which they are, nominally, but they are. Second chance with a 1 or 2 bar, those can be to any degree. Looking back after one or two bars, can we dismiss any of this retroactively? Like this sentiment extreme? Are we right back into that 3-minute low? Looking pretty attractive to give it a benefit of the doubt. Might have been stopped out here on the first try, but this is a reason to give it a second try for this being the low of a pullback. Can always limit the loss to a couple of points, 3 points. Does it make sense to do that? Well, to completely retrace 5707 from what was 98, 99, that's a 2 or 3 to 1 reward to risk ratio. Pretty attractive. And that's just to retrace the usual attention span of weak-handed counter-trend sponsorship. Could return to rally mode. Could return to 5714. The risk to reward on that, much more substantial. Trading is 100% difficulty, and I agree with that 110%. Sometimes the difficult part, as I've been describing, is the patience. Sometimes the difficult part is taking the loss. Pulling the trigger on a stop. And then, if that's the case, it can be even more difficult to give the same setup, the same leg that we just triggered a stop on, giving it a benefit of the doubt by getting right back in. We can look at this retroactively and wonder maybe a wider stop should have been allowed. Yeah, in this case, sure. 110%. The problem is that in those instances where it did pay off, there's instances where it plays out much more negatively. And it can come down to personal choice for every individual trader. How big is your risk tolerance? How wide of a stop? But anytime you employ a stop tactic, you have to be ready to get right back in case price action was just a whipsaw, just an extreme situation. A lot of work goes into identifying the, in this case, upside potential. And then identifying a low-risk entry. And if that low-risk entry area was exceeded and exceeded the stop, but that was just temporary as it was here, gotta have a rationale, tactic for getting right back in if price action merits it. And when you can look back and see that excess that triggered the stop, the extreme of the 3 minutes, 1 or 2 point buffer room for noise, even that was exceeded. Looking back, several points higher, but that was just errant ticks. Sentiment extreme at the low. We're still right back up. The usual attention span of weak-handed counter-trend sponsorship. Now, I'm assuming that this continues to be in the name of ultimately retracing the origin of this dip, if not higher. If you're scalping, that was an opportunity to scalp. So here's some new information. We now have a 3-minute low to testing the pullback limit. And now that we know the usual attention span of weak candle counter trend sponsorship took price all the way down to about 56.95, 1 or 2 point buffer room for noise, I can adjust the sell signal quite a bit higher. Right now I'm going to come into 93.50. That's still not a very attractive sell signal versus current levels. I do, though, want to identify here's how much room there is for selling pressure without it even beginning to reverse momentum down. And if this were to produce a fresh high, I'll be able to raise the sell signal even more so. In fact, just returning to the high, which we've done, I can now look at a 61.8 retracement of this entire leg. So that gets us down to 5,700, 356. Raising the sell signal to 96.50. This is now a productive pullback limit, meaning that it produced a fresh high. Its test produced a fresh high. You can go off of just returning to the high, but this is more definitive. There's now no bullish reason to retrace the low of that pullback limits test. Not in any time frame. We can even infer a 61.8 retracement being a proxy for that low. So now there's no bullish reason to retrace 5,700. I can raise the sell signal pretty aggressively. And now that we do have a fresh high, up to 5709 plus, new pullback limit is 5705. All right, question. If we fail to exceed the short-term high at 5708, is this an attractive scalp short? So if we had failed to recover it by 1135, 1137, would that have been an attractive short? To sell into strength? No, not into strength. Not because it couldn't have peaked, just because and had to do this, but because it just wasn't definitive enough either way. But a deep enough retracement, had this been the peak of the bounce and then retraced more than 61.8% back to the low, any deeper than that, that would have been the attractive short entry. Now there may be we may be getting closer to something that would be attractive to sell into, if only because we'd be that much closer to where we'd know it was wrong to be short. So we're, for all intents and purposes, returning to the highs. Haven't gotten there yet. Lower high is always possible, but this is the whole point to identifying the bias. When we're in a bias up renewed, bias up, target far exceeded, maybe we're not ending or extending to some higher target. But separately, we had Fibonacci projections from this overnight inverted head and shoulders with its maximum 261.8 projection, this post-open swing with its 161.8 projection. A lot of resistance there, even in the most bullish scenario, looking for a pullback. And the pullback candidates thoroughly tested. But once tested, there comes the likelihood of returning to the high. And maybe this would have been one of the exceptions. That's why there's a stop. All right, pullback limit is now 57.09. If 57.09 were probed, we would just start the count all over again. Being this close to the origin of the pullback, the reward for buyers that absorbed the pullback, the consequence to sellers that waited too long to try to take control. Being so close, it's another opportunity to tighten stops, maybe not lighten exposure with the greater likelihood of actually probing the high than to stopping short. And there we are on the higher highs. Pullback limit can be raised in this case to 57.20. We're testing the pullback limit. Haven't had a test of a pullback limit in a while, and if this pullback limit, having already been pierced by at least 3 ticks, already piercing the pullback limit by at least 3 ticks, starts a countdown. When we know what the 3-minute low is, I'll raise the sell signal to within 1 or 2 points. But the upside is fulfilled. This is what buyers earned by exceeding the bias up target through 10.15 and not rejecting it through 10.30. And then the degree to which price had extended but no higher in that window made a pullback likely. And separately, we had a couple candidates for a pullback. And then we were able to observe price action. We know that overlapping the level, it doesn't have to be held precisely, but just overlapping it is still testing it. All of that goes into expecting a likelier recovery and different candidates for trading it. So now we're looking at a 3-minute low to testing the pullback limit, and the pullback limit's 3-minute low down to 57.16, 1 or 2 point buffer, room for noise. The most aggressive sell signal here is 15.50. Is it actionable? You know, it's the first reaction down. This is currently the first reaction down from the previous trend's extreme, and this reaction down has a horrible track record of triggering a reversal. The reaction down has a horrible track record, the first reaction down from a previous trend's extreme. That's this. Until that reaction down retraces 61.8%. So high to low of the pullback currently is 57.2050 is a 61.8% retracement. Until that is corrected, this leg, we're distinguishing the next leg from this one. This leg having a horrible track record for triggering a reversal. The next leg would be credible. Now that doesn't mean you can't take a sell signal anyway. Just know that that's the limitation, is it's going to be attracted back to at least a 61.8 retracement from some level. Now that level is even lower. Now a 61.8 retracement comes around 19.50. So if this sell signal triggers, we know its productivity is going to be limited, whether in degree or duration. Maybe this is the 3-minute low to testing the pullback limit. The usual attention span of weak-handed counter-trend sponsorship, if the leg having a horrible track record for triggering a reversal, ought to be bought. Now, when I leave outstanding this 56.85 objective below, that doesn't mean this particular signal gets us there. But that's a likely eventual reward. All right. If you're in the simulcast, the YouTube simulcast, thank you for checking in. This is just supposed to be for the morning, today and tomorrow morning, but I'm leaving this open for the afternoon. We've got FOMC this afternoon, FOMC events. Probably going to likely to inhibit price action now until the policy statement at 2 and the Fed Chair Q&A at 2:30. So normally the 2-day simulcast open house would be closing right now since it's noon, but we're going to leave it open today. Tomorrow is just going to be, I think, for the morning as usual. If you have questions, there's always questions being asked in the member room. What you're seeing is what members see. You're seeing what members see, but they're logged in. They also get the blog updates. They get references in the knowledge base. And they get to ask questions in the chat. You can ask questions if you'd like. I am going to read the questions aloud as they come in from members. If any questions here in the YouTube simulcast, please go ahead and let me know those. But you can see there's a complete cycle of a trade. I got caught up in explaining the different labels through the open, so we didn't really catch anything. But that doesn't matter. Something comes around. But if you have any questions, definitely let me know. We're going to be doing a giveaway. I've got three things that we're giving away. Right now, I'll be updating, though, the PM bias parameters. And then I'll get them labeled on the 3-minute chart. All right, there's a question on the how do we determine the down signal at 5716? And that was identified before the pullback limit was identified. Um, Here's another aspect to the question is why was it so aggressively placed? Because there's going to be candidates. There's always going to be multiple candidates. But when we're on the cusp between timing windows or getting into a new timing window, which is what 11:30 to noon, and then noon represents, if there's suddenly counter trend price action, it's going to be that much more credible. And not just because it's suddenly counter trend, but because the trending didn't attract reinforcements. So in this case, we've got buyers just exploding higher, playing themselves out right into the end of a timing window. It's just classic. It's essentially a short squeeze. So I can afford to get more aggressive on a sell signal because these buyers are less credible, less reliable for extending. So then I look at the candidates. What's the pattern? I happen to see this channel. A channel has kind of a force field around it, 61.8%. I can only draw lines, well here, actually. Ready to go. So this channel has basically a room for noise around it of 61.8%. So low to high. There's the 61.8 projection. 57, 17, 70, 75, actually 57, 18. So what's the next degree of Fibonacci beyond it? I mean, it's really getting into the weeds, but this is how I use it. Its counterpart below, in other words, we can overlap 57, 17, 75 to its next counterpart, 57, 15, 50. That's where this should be, is 1550. 1550, 15, give it a couple, 3 points, room for noise. That's basically it. There's some other coincidences, coinciding projections. I want to be assured that whatever this explosion higher was satisfied buying pressure, didn't leave anything on the table that has to be tested. We can extend higher, but not without reinforcements. So I don't have any greater degree of confidence that we're reversing down just because the sell signal is being probed. There's a 3-minute low, 1 or 2 point or 1 or 2 minute buffer of room for noise. That has yet to be exceeded. This may just be extra noise, but we've now retraced back into the channel, back to the origin of its breakout. Naturally supportive. Bounce limit is now 57, 1425. 1425 bounce limit. So long as 1425 holds as resistance or isolates a 3-minute probe, and I'll be lowering that, this reversal down is in control. Now, this leg itself doesn't have to get to 85, and it's really 85, 88. This doesn't have to be retraced entirely by this leg. Even if I knew with 100% certainty it were going to be retraced eventually, that doesn't mean this is the leg that does it, but it could be. Start breaking through this this morning's range, which has been thoroughly tested. Its support has been thoroughly thrashed away. If the upper end of it is more than tested as support but broached, then this could be an air pocket all the way down to its lower end. And that kind of momentum could see a quick overthrow down to 88. I'm going to restart the screen. It's not the charting program, it's the Adobe platform. Let me just reboot that just to make sure there's no hiccups in it. Now, with FOMC coming this afternoon, FOMC just a couple hours away, not even that. Not a lot of room for trending. Probably not going to be attracting new sponsorship to extend the rally. I'll still identify here's a buy signal or at least an inflection point. Remember, an inflection point, a buy signal is at its core, it's resistance. That's why its recovery would be so productive, because resistance was exceeded. But in practice, do we expect a buy signal to be triggered? Or if a buy signal's resistance were being tested, would we expect that right now ahead of FOMC instead to hold? Are we really going to expect reinforcements or new sponsorship to probe uncharted territory for the day, new highs for the day, with FOMC just a few minutes away? Probably not. So just to illustrate how much room there is for a bounce before it starts trying to trigger a buy signal, if there were a bounce up to 57.1925, that would be a candidate for stepping in short. So as we come through the noon hour, facing the noon hour exit, it's certainly possible that the noon hour was counter trend. It's lower volume and especially contracting volume ahead of FOMC. There's a new bounce limit being probed. Its 3-minute high looks to be about 57.14, and so 1 or 2 points buffer, room for noise. Back above 15.75. If a buy signal triggers, keep in mind, again, FOMC just a few minutes away, basically, not an hour away. Probably not going to start probing fresh ground. Not this close. Maybe in reaction. So even if the buy signal were going to be productive, its reward might be just to retrace the highs, just to retest the highs. RSIs were simultaneously overbought there, and that is typically going to be retested. Hey, just a reminder, if you're in the YouTube room, don't forget to, if you're not already, be a follower or follow the channel so that you'll know when the room opens tomorrow and you'll have the direct link to it. So as we come out of the noon hour into the PM bias window, waiting for FOMC. A little bit deeper dip here, back down to earlier lows. It was a turning point. Everybody sees that. Bounce limit is 97.25 being tested right now. $56.97.25 bounce limit being tested right here. Pretty productive sell signal. So, what was true up here is true down here as we come into FOMC just around the corner. It's really difficult to attract sponsorship to break free from the recent range. Earlier, sitting at the highs, that was room all the way down to the lows, and there is still room down to the lows without being new sponsorship or anything more than retracing. But we are coming into a low. I mean, there is a prior low. Everybody sees it. They help produce it. So it's going to be difficult to extend. If we do, there's, say, a little dip lower. Recall how the open, because of features and characteristics, behaviors that were developed at the open, we knew that the relevant levels of the open, for other reasons, 56, 85, 88, at some point will want to be retested. We knew that with the first 15 minutes having tried to probe higher but failing, not still overlapping overnight highs, certainly not recovering prior highs, but failing, falling back under prior highs as of 9:45. We knew that, not that there'd be another bounce, but if there were, that it would likely fail. And it would likely retrace this 85, 88 area. And it doesn't have to be this leg. It's actually a little more productive than I would have expected, but certainly part of the, or in the realm of possibilities. And so the attraction to 85, 88 doesn't have to actually meet 85, 88. It just has to be the attraction. That has to be the current focus. There's nothing else that the market's focused on to the downside. And there wasn't really anything overwhelmingly influential to the upside, not from up here. Now there's a prior low being tested, and that can interfere with the attraction to extend to back down, and that might be enough to pause or even end this until the FOMC events. Might even look at a buy signal. Here's a 3-minute high to testing the bounce limit. 3-minute high to testing the bounce limit. So, 1 or 2 point buffer room for noise, call it 5,700 half. We're triggering bias down. I'm not really interested in being long. I just want to, and by the way, triggering bias down, meaning that the target is in play, 56.90, because at 120 we've exited or entered the bias window under the bias down signal. The bias down target is in play. I don't really want to take a buy signal, but I do want to see the inflection. I would use that to sell into. But things are going to get a little bit less reliable the closer we get to the FOMC statement. Different sponsorships that are involved, different sponsorships that step back. So any questions about this, let me know. But meanwhile, the downtrend remains intact. If this is just a obligatory bounce, because there's the prior low, and so looking left, the market's going to pause there or respond to it, especially if it's greeted so abruptly, not sawing its way through it, but just plunging right down to it. All right, I'm going to get this updated in the blog. If there's any questions, let me know. If you're in the YouTube room, the YouTube simulcast, any questions? How did we come upon this? How was it traded? What were some of the options? What happens now? What do some of the annotations on screen mean? Any questions? Let me know. We're going to be doing a giveaway initially for some memberships, for some free 1 month, 3 month, and 6 month memberships. It's $375 monthly, or every 4 weeks actually. And I'll be giving away a 1 month, free 1 month term, free 4 week term, free quarterly term, and a free 6 month term. So be sure to follow. Send in, be prepared. I'll be requesting your email address so you can get into the drawing. So there's the bias down target, already put into play at 120, already well on its way under the bias down signal. Had there been a bounce to the bias down signal, we would have known to sell it. A bounce to this 5,700 half resistance, I would have been a seller as I described. Bias down, by the way, is bias down. Just because the target is met doesn't mean that's the end of the road. It could be. It is supportive, but it is still more so that the bias down signal is resistant. And we do have these attractions down here. We knew when they were held as resistance through 945. We didn't know we were going to probe above them to whatever degree. We just knew they'd have to be retraced if they were. And they were probed. And so 56, 85, 88 attractions below. Bounce limit is 93.50. All right, so again, bounce limit, 3 minute high. 3 minute high got up to 56.95, 75, 56.96. 1 or 2 point buffer, room for noise. We're up at 98. That's being probed. If you're following the 3x3 tactic, that's a sell. That's a sell for the potential to complete the retest of 85, 88 from above. We just scraped 88. Having said that, you see the support of the bias down target. A lot of selling pressure having been satisfied there. You see the FOMC events bearing down. There's going to be some heightened, as I described, some heightened volatility. But this is where you step in if you want. And if you're able to also honor a stop, you have to be willing to take the loss. Otherwise, the risk to reward ratio is meaningless. But just following the 3x3, giving it a little latitude, this is where it's sold, but even now it's getting a little too aggressive. Don't lose sight of what's coming around the corner and how that can affect the volatility here. All right, I'm going to have another sell signal identified, though. Be right back. So I'm not really interested in having a position into the FOMC news. It's going to be a lot of volatility. The first 60 to 90 second following the news is weak-handed knee-jerk reaction. Bounce limit, by the way, is 90.75. And look at all this selling pressure being satisfied. There's the retest of 85.88. We knew it was coming at some point. I would have preferred that it be left outstanding so we could have had that predictability after the news, knowing we can just arbitrage against knowing that that's coming. But now it's already come. We don't have to actually touch 85. Really, 87.75. The open's already done. So there's really no predictability here any longer. The bias down target is met. The unfinished, not really unfinished business, but the attraction below is neutralized. If you want to be short, just know the knee-jerk reaction to the headline, even if ultimately we're going to resolve down, could still be blip up. So if you sold the resistance, as I noted, the buy signal, I wouldn't want to take a buy signal in a bias down window. It's a level to sell against. If you sold that or waited for its reversal back under the inflection, this is pretty much where you tighten stops or lighten exposure. But now coming into the news, just a little more, little less attractive to be, a lot less attractive really, to be exposed at all. So any questions, let me know. I'll be right back. So if you're just visiting for the first time, you might have noticed there's a lot going on here. There's a lot of moving parts. That's actually how I can be so specific. And that's actually one of the most important ways to create context or identify context. I try to manage a lot of that myself, the keeping up with the context and being able to describe it. Describe it so it's actionable. But that's really the point, is as much of that I can take off of your plate to be able to identify what's the likely resolution and to be able to describe, when time permitting, if we're not in a fast-moving market, why, so that you have a degree of confidence, and then even to go into tactics. There are instances where we'll have such a high degree of confidence in some setups that I'll remind it's probably not a bad opportunity to increase exposure. If you're trading X units, double or triple it, or to increase risk. If your stop is 2 or 3 points, maybe consider 4 or 5. So I'll certainly identify the context, the direction, the degree of confidence. I think we've had a couple of really good examples. Not just that they've been really profitable, but just really good examples of what we see daily. You can tell, not necessarily straight up, but trying to cut through that. Trying to identify specific levels where you can make a decision, and also describe the different decisions available. At first I thought that was character of price action, but now I see. So, yeah, I don't urge trading at any particular point or in any particular environment. But there's so much opportunity. The more that there's catalysts ongoing and price has volatility, that actually creates opportunity. Combined with risk control, I don't want to be exposed right now with the news about to hit. I don't want to be exposed to the headline. A knee-jerk reaction is going to be multiple points, and it could be existential in the immediate 60 to 90 seconds. We don't need that. We can trade in front of it. We can wait for it 60 to 90 seconds to elapse and then trade behind it. But I definitely want to trade on these days. So, as suspected, a lot of selling pressure has been neutralized, satisfied, dipping to the bias down target already, retracing 85.88. That's not to say that a long would have been justified going into the news. If you want to trade this kind of fast market condition, that's fine. Knowing that selling pressure has been so thoroughly neutralized is an edge. But But I just as soon wait for the dust to settle. The first 60 to 90 seconds following the headline is weak-handed sponsorship. It's also strong hands stepping back. So really nothing that's actionable, in my opinion, until now we're really getting through it. Settling up here out of that window up around 57.03. Still looking at a broader brush strokes. Somewhat of a head and shoulders. There's the neckline. Somewhat parallel shoulder line. Some overlap, but again, that's the noise. So I've got a sell signal here under 97. This is sort of moot. We're in the, that's all being tested during those 60, 90 seconds where price is disqualified from being able to trigger anything. But now back under 97 would start to signal this leg being corrected, if not retraced or even reversed. All right, above 57.13, buy signal. So we've basically got our lines in the sand drawn out. Lines in the sand identified here, 57.13, above 57.13 starts to trigger a buy signal. It'll need to be pierced by at least 3 ticks to start a 3-minute countdown to know where anything higher than that 3-minute window would be reinforcements. You can act whenever you want to, but that's the challenge that any further upside would need to overcome. Meanwhile, the sell signal down here at 97.50, under 97.50, by at least 3 ticks would start a 3-minute countdown. Anything lower than that 3-minute low would be reinforcements to the downside. That doesn't mean that a position has to wait or that an entire position needs to be deployed immediately upon piercing. Whatever your tactics are. But the closer we are to that headline, the more room there is for noise, the more likelihood for noise. Knowing that there's that much more potential for noise, it can be exploited. This may be now upon first contact probing under 97 or by at least 3 ticks under 97.50. Within 3 minutes, maybe a couple minutes, try to scalp something out of that. This isn't precluded from extending down to even lower lows. It is a bias down window after all. And even though the overnight, remember the first 15 minutes, the first 15 is the handoff from overnight to intraday. And if there's any overnight construct that's going to be influential intraday, it has to have laid the groundwork coming out of that first 15 minutes, which this inverted head and shoulders at the low did do. It helped identify a high, in fact, or helped identify where a high was likely to produce this pullback. It's interesting that even though we're out of that window, that the pivotal uptrending support from that inverted head and shoulders has been influential post-open. Of course, it's influential here during the first 15 minutes, but it continues to be influential. You can see that spike down, tagging this pivotal uptrending support. As we come into the close, not yet, but into the last half hour, the position scoring window, then the intraday is handing off to the overnight. And overnight constructs like that head and shoulders, that inverted head and shoulders, and its uptrending pivotal support can start to be more reliably influential again. And if not just influential, but predictive. So we've got a 3-minute low to testing the sell signal. Three-minute low to testing the sell signal. Until that 3-minute low is exceeded, the sell signal can be detoured. This is detoured. This is detouring right now. It can be detoured back up for 3 minutes, whatever the 3-minute high is. Anything in that time window, anything in that time frame is testing the sell signal. You can't be doing both. The same bar testing the sell signal cannot also trigger a buy signal. So a buy signal is disqualified from triggering until we've established the 3-minute extremes. So price triggers a timing window, dynamically opens. And these are fixed timing windows listed below the market, below the chart. A dynamic window opens based on price action. So here's an inflection point. As soon as it's pierced by 3 ticks, that timing window opens. The 3 minutes of the usual attention span of weak-handed counter trend sponsorship. Anything beyond those 3 minutes either way, anything beyond those 3 minutes either way is either reinforcements for sellers or invalidating the sell signal back above the 3-minute high. So I'm not going to have a buy signal in this range. When I know where the 3-minute high is, I'll tack on 1 or 2 points room for noise, identify what is relevant in that range from prior price action, calculable retracements, structural highs and lows, and then I'll identify my buy signal. Buy signal. The transcript wants to take it as bicycle. Okay, so this is a 3-minute high being exceeded. The most aggressive buy signal here is 875, back above 5708.75. 3-minute high, 1 or 2 point buffer room for noise. That makes this a really attractive short right here. Not because it's any likelier to resolve down, but because it's so close to where we know that down is wrong. Maybe even stop and reverse to long. So this is now exceeding that 3 minutes either way, probing under the sell signal, or even detouring back above it. It can be reinstated, but right now there's a buy signal working, and so I can't reinstate a sell signal for 3 minutes not while this buy signal is being overlapped. All right, it's 2:15, and if you notice from the timing window strip under the chart, the PM bias window starts lapsing at 2:30. 10 or 15 minutes prior to that, we're within view of the bias window lapsing. So it's a bias down window, bias down triggered. It triggered cleanly. But what that means is, even though its target was already met, is that its signal should define the window's upper end. It doesn't have to be tested. It is being tested. Since it's being tested during a bias down window, either that needs to have held, it clearly did not, or since the bias window now within view of lapsing, it starts lapsing at 2:30, it finishes lapsing as we enter the final hour. If the bias down signal is not defining the window's upper end, it needs to be retraced. We now have an attraction, just like I described from the open, that it was weak-handed probing above the overnight highs because the opportunity for stronger hands to have probed it, the opportunity for stronger hands to have probed above overnight highs and recovered that probe, maintained that probe, would have been through 9:45. Instead, strong hands did not come in and reinforce that probe, and the probe failed as of 9:45. That didn't prevent trending up anyway. It just doomed that attempt to failure. It needed to be retraced. Well, it's been retraced. Same thing here. Bias down signal, same exact concept, just a little different. It's a bias down window, triggered cleanly at 120. And here we are, the bias window lapsing, but probing above the bias down signal. It's clearly not preventing a higher high. It's just telling us that at some point, we're going to need to retrace the bias down signal. We need to come back down to 5704. A lot can happen in between now and then. So you can't just arbitrage against that traction back down to 5704. Because we don't know if in the interim there's another 10, 20, however many points to the upside yet to come. We don't know if that's going to be retraced in the next 10 minutes or 10 hours or 10 days. Usually much sooner rather than later. Pullback limit is 57.15. I believe 57. Actually 57.14.25. Pullback limit being tested right now. So at some point, I know from wherever, whenever we're going to be retracing, or at least that's my opinion, back down to 5704. So let's just keep that out there. That attraction might serve to slingshot price back down and trigger other sell signals and go on to lower lows. But probing above the bias down signal in a bias down window, that's actually counter bias trending. Let me get the right card up here. That is counter bias trending. It's counter to the bias. Now, it wouldn't have mattered had buyers waited until the bias window at least came within view of lapsing or had lapsed before trying to probe above its bias down signal. Then it could have done so without any requirement to retrace. But there's a requirement to retrace at least the bias down signal. And often, when the bias window lapses, when it starts lapsing, it hasn't actually begun to lapse. It does that at the bottom of the hour. But if we get to the bottom of the hour and still trading above the bias down signal, still yet to retrace it, there's even some likelihood of retracing wherever the market was trading at 120. When the bias window was entered at 120, where was the market trading? Where was it trading when it triggered bias down? And at that moment, was it trading right around here? 95, 50, 96? So that's not the requirement. That's just a likelihood that we're even going to extend down to 95, 50, 96. So pullback limit, 3-minute low down to 57.11. I'm not going to be very aggressive on a sell signal, but 57.08 is my sell signal. It helps to know just anecdotally, experientially, that the FOMC policy statement's reaction usually only goes so far and then becomes hampered, paralyzed, awaiting Powell's appearance. So if buyers were able to produce this, or a knee-jerk reaction was able to expend this much energy to this degree for this duration, and here we are with Powell's appearance just around the corner, several minutes away, some sort of correction or retracement, maybe even reversal, could get underway. And back under 5708. Want to pierce it by at least 3 ticks to start the countdown. But back under 5708. By at least 3 ticks to start a countdown, and then 3 minutes to identify the low, and anything lower than that is reinforcements. You can always start selling right under 5708 as soon as it's pierced, or as soon as it's pierced by 3 ticks, or monitor for a minute or two, watch the fluctuation around it. Is it being rejected? Is it acting as such solid support that this dip to it is bouncing back up? Not quite. So we've got the minimum attraction back down to the bias down signal that was prematurely probed during the bias down window. If it can be retraced by 230, then that will satisfy the attraction, the requirement. If it's still outstanding at 230, then probably not only will it be retraced, but also the 120 print, which was about 56.95, 96. Nothing ensures that that's done sooner rather than later, or from lower instead of higher. It also doesn't ensure that even if a attempt to reverse down gets underway, that it's going to succeed. Even if it looks like the attraction down to 57.04 is being played out, that's no assurance. I do have a high degree of confidence, having nothing whatsoever to do with technicals or even charts, just behaviorally, not expecting that price is able to trend or maintain trending right out of the knee-jerk reaction to the policy statement, that there's going to be some pause, as there is. This is what I'm referring to. And maybe even a deeper retracement, price resets. All the weak-handed buyers that jumped in, jumping out. The upside pressure they applied now being downside pressure as they exit. right, so a couple things going on here. First thing is, there's the bias down signal. It's been retraced. It was retraced now, right now, is what's important. It's 2:30. The bias window is just now starting to lapse. It was within view of lapsing, but this is what matters for another reason, because since the bias window is lapsing at the bias down signal, ultimately it is defining the window's upper end. It's attracting price back down to it as of 2:30. That neutralizes the attraction. It no longer needs to be retraced. It's being retraced. Also, because 2:30, here we are at 2:30, and the bias down signal has been retraced, there's no greater requirement then or likelihood of retracing where the market was when it even printed no bias. Or bias down, that is, which is back down here at 95. So there would have been a likelihood if we had just delayed this return to 5704 if it had not yet been neutralized as of 2:30. But here it is right at 2:30, and within a minute, that's fine. It's being overlapped. It's been retraced. So we don't have that attraction necessarily down to 56.95. If there's any attraction below at all, I think it just extends down. And basically, bigger picture, if buyers aren't taking advantage of this or leaning on this in any way, producing fresh session highs, if buyers can't make that happen, then I don't think we just range sideways, but actually roll over, start getting attracted back down into yesterday afternoon's range. Probably pretty supportive there, it would seem, at least initially, but after that, all of its support is pretty much thrashed away. But right at the last minute, our attraction was neutralized. The market, you can see from the behavior, it certainly knows that. The market certainly knows the attraction below neutralized. So we'll identify another sell signal. None of this detracts from the potential to just extend higher, as I described. I just don't have a buy signal labeled. If you can see this, there's a flag, basically. Pullback limit is 23. So watch the pullback limits test. The usual attention span of weak-handed counter-trend sponsorship. The usual attention span of weak-handed counter-trend sponsorship is 3 minutes. Not all 3 minutes have to be spent probing under the pullback limit, let alone probing lower and lower under the pullback limit. But once we know where the 3-minute low is, we can identify a low risk entry. Not that it's any likelier to recover, it's just that it's so much closer to where we know it's wrong to be long that we can lose the least. Here, by the way, is a cheat sheet on the 3x3 test. For members that are in the actual platform, logged into the site and viewing the vidiROOM as members, they're able to click in the upper left-hand corner. Upper left-hand corner, there's a link that displays the 3x3 test and other references. The legend. Stop. Well, the legend levels. All sorts of levels, calculable, prior support and resistance, unfinished business, overextended RSIs, Globex opens, range, etc. Today, by the way, we're working on a wet X. We're going to be looking at price action at the close, this being expiration week, and identifying whether there's any kind of bias toward expiration. Friday afternoon then gives us another signal that we combine with this afternoon signal and potentially have a pretty good read on what Monday morning intends to do coming out of expiration weekend. All right, so we have a 3-minute low to testing the pullback limit down to 57.14, 14.50, 1 or 2 point buffer room for noise. Actually, my nearest inflection under 14.50 is actually 57.12. I may be able to raise that. Yeah, I can actually raise it to 12.50. That's it. we go. All right, so as I was describing before getting detoured here, upper left corner, there's a link to open all these cheat sheets. Here's a risk-reward summary, how to do the math, measuring against, if I sell this, what's the potential reward versus where I know my stop should be. Is that an attractive trade-off? But right now I want to keep the 3x3 up. So this is as deep of a pullback as possible under the pullback limit without yet reversing momentum down. Really attractive long. Not because it's any likelier to recover, but because it's so close to where we know it's wrong to be long and would even want to reverse to short. So long as we have a system, and that's my responsibility, to have a system that is likelier to move in the predicted direction, let alone to the predicted level, more often than not. Or not even more often than not, just so long as those times that it does produce that quantifiably that's more profitable than the cumulative losses for all of the stops that are triggered at a loss. We can sit around doing that all day long and net out gains overall. All right, so there's a reaction up. Notice we really haven't gotten very far since Powell began. It's a little obligatory blip up here, and we're hovering here. It's not been rejected, but just bear in mind that he's not being that productive. I think a fresh high can be pretty productive if it gets going here. I'm not so concerned with the upside. I think that'll take care of itself. But I'm not going to tolerate much of a reaction down. In fact, I'm now about to raise the pullback limit. Well, all it took was a little criticism. Pullback limit is 28. So no matter how bearish, you can be as reasonably bearish as possible. And that means being able to reason out a bearish analysis and still have reason to take a bullish position. just so long as you know where the edge of either is. So if your bearish analysis is back under 57.12, 57.12.50, points down, reverses momentum down, and price dips to 57.12, 57.12.50, that doesn't mean you take a bearish position. Get long it because that's the edge of that position. It hasn't yet broken. Instead, all this selling pressure being expended just to get back down to it. It may be no likelier to recover, and in fact, if you've reasoned out a bearish position, it's therefore less likely to recover. None of that matters. What matters is the profitability and the risk control. The potential profitability to that being a low is to retrace the origin of the pullback. And from 12.50 just to retrace 27. What's your stop? 1 or 2 points under the inflection, maybe a stop and reverse to short. So 14 points upside. Say you're looking for a 1 to 3 risk to reward. That's 5 points of a stop. I don't want a 5-point stop, but a 1 or 2 point stop, 2 or 3 point stop, really nice risk to reward. And that's just for the likely retracement back to the high. There's the potential for resuming the rally through the high. There's a minimum expectation of just retracing 61.8% back up to the high. I wouldn't exit there, but I'd tighten my stop, so at least I'm at a break even or better if my likelier highs don't develop. Now testing the bias up target. We're out of the bias window. The bias window started lapsing at 2:30. It finishes lapsing at 3 o'clock. There's no predictive value to the bias parameters. They are influential. So testing 5740 may not extend higher. It may just overlap. So long as it's being overlapped, it's only being tested. It's not actually breaking higher. It's a target. It's a bias up target. Being a target, buying pressure is satisfied. That doesn't mean this can't attract reinforcements to extend, not extend as in eke out another point or two higher, but literally take this leg and double it or triple it, or actually more likely a Fibonacci relationship of 1.618 times this leg, something to that degree. So either the bias of target is satisfying buying pressure, whether that means we hover here or reverse down or extend this leg by a factor. So it's a pretty big and critical line in the sand. Notice also we're filling a gap. Monday's cash session close equated to 33, 57.33. 57.33 met. Gaps back to closes don't require being filled. The 32.75 cash session close and yesterday's 57.09 open that created the gap. There's the proxy for that gap. Instead of extending all the way back up to 33, the 61.8 retracement is going to be influential. In fact, look at it influencing today's high until this afternoon. But now the actual gap is filled. Still overlapping 57.40. The market seems happy to have the news behind it. RSIs are simultaneously overbought. Both 1 minute and 3 minute RSIs are overbought at the high. Even if there's a reaction down, I have a rule that simultaneously overextended RSIs need to be retraced. So just because 1 minute, 3 minute RSIs are overbought doesn't mean we react down. It's actually a little less likely to react down. That's pretty much all available strong-handed sponsorship producing that simultaneously overbought 1 minute and 3 minute RSIs. But if there's a reaction down, the longer that endures, the closer to some sort of a pullback eventually. If, when a pullback does develop, if the high print, as it is now, if it's accompanied by 1 minute and 3 minute RSIs simultaneously overbought, that will require being retraced. Same as the bias down signal that was prematurely probed, required being retraced. Could backtest it, having neutralized it, resume the break. Pullback limit is now 42.25. I'm going to raise the sell signal. This is a series of higher highs and higher lows. So the first reaction down from here, from this formation, is very unlikely to be productive. It's very unlikely to gain traction. If suddenly this series of higher highs and higher lows were to plunge back down or just react down for some reason, say headline from Powell, because it would originate from this series of higher highs and higher lows, we'd expect its complete retracement. So I don't want to sit here betting that a reaction down is coming. I don't have control over the headlines. But if the headline comes in this environment, in this series, and triggers a reaction down, I'm going to find a place to buy it, because I'll have a high degree of confidence it intends to be recovered. Even more so with the highs, if at the time its RSIs are simultaneously overbought. But that doesn't mean I can't identify how much room there is for selling pressure before it even starts threatening to reverse down. So here's a pullback limit, 3-minute low, down to 33 almost. Just doing the math, 30.50 is an inflection down. Not necessarily a short entry. If the first 3 minutes probing back under a pullback limit were to coincide at that sell signal, all the more reason to buy it. But meanwhile, the ongoing series of higher highs and higher lows persists. Another higher high. I just popped my email address into the chat, and as I pointed out, as Jeff pointed out, or as I pointed out in my interview with Jeff Tennant, that I'll be giving away tomorrow. I'll be giving away 3 subscriptions, normally $375 every 4 weeks. Access to the blog, the complete run of the blog, and the vidiROOM that you're watching now. By the way, pullback limit is now 44. So normally $375, but I'll give away a free 1-month term, a free 3-month term, and a free 6-month term. And go ahead and register. You don't have to use it if you want to give it to somebody. This is not available to current or recent subscribers. But if you win, you can give it to someone who is not a current or recent subscriber. And if you don't win, I'll also have some discounted pricing on just the regular subscription. All right, let's find some candidates here. Candidates for extending higher, what needs to be or can be recovered through any relevant window to give us any greater degree of confidence in extending higher, and what's going to interrupt or possibly prevent extending any higher. Let's start with the latter, which is this consolidation at Monday's highs. The consolidation launched a reaction down. The reaction down, actually this reaction down was targeting 57.19. It went on to produce that. And 57.12 overnight. And even extended down through yesterday's open. But this is a little shelf here of support. It is a low. It was a low to this range. A prior low. It's higher from below. It's higher. So a higher prior low. Higher prior low. Basically 46, 48. It's being tested now, and it is resistance. And if it's recovered through a timing window, so let's say the proxy window hasn't opened yet, 310 to 320. If we enter 310, 320, and more importantly, exit it above this higher prior low, and maybe even above the upper end of that range that it's the prior low of. You can see that. It's basically 57.46 up to 53. Let's see where we're trading when the proxy window opens at 310. There's the proxy window identified below. Let's see where we're trading when that opens, and at 320, whatever the relevant counterpart is to have been exceeded or to have held. Now probing above it, I can already tell that if the proxy window at 320 exits back under the entirety of this little consolidation, that'll put in a turn. But meanwhile, I can raise or add a pullback limit 52.75. All right, we've got a 4-minute low. 3-minute low, sorry, to testing the pullback limit. Usual attention span of weak-handed counter trend sponsorship. All the way down to 57.54, 55. Overbought RSIs at the high, requiring a retest. And the first reaction down. This is the previous trend's extreme. Right here, first reaction down. This leg has a horrible track record of triggering a reversal. So, we know we want to buy the pullback, but if you know that the usual attention span of weak-handed counter trend sponsorship is 3 minutes, and you're sitting at the 3-minute low, maybe not for long, but at or near the 3-minute low when the 3 minutes lapse, the 3x3 tactics say you have to buy that. You have to have a stop as well. The likelihood of recovering back to the high is one thing. It's not a requirement, and it's not even a requirement to do it immediately, even if it were a requirement. It could be done eventually and from lower, from a deeper pullback. But the first reaction down off the previous trend's extreme has a horrible track record of triggering a reversal, because it's usually going to be at least retraced by 61.8%. Well, this has already done that. There you go. 61.8% retracement. But that's an attraction that can help to resume the rally or recover it back to the high. So we know it's going to be retested because of that, because overbought RSIs require its retest, because we're in an ongoing series of higher highs and higher lows, and the first reversal attempt from that is pretty reliably going to be retraced. Now that doesn't mean that this can't develop into this before ultimately recovering. If it does, maybe it recovers tomorrow. Or something more substantial detours it even deeper. Overbought RSIs can remain outstanding. There's no time frame that it requires being retraced. It's just usually going to be retraced sooner rather than later. Well, now that this has been retraced by 61.8%, I am willing to look at a sell signal for just an intermediate deeper dip. Say down to 38 before recovering. All right, we're going to be getting busy here as we come into the close. I'm going to start talking about the proxy window. And it looks like there's a really quick move that's going to be developing. And then we'll be doing the market wrap. So I just want to make sure that everybody in the YouTube room remembers Go ahead and register. Register for the drawing. No obligation, and you're free to give away your winnings if you're awarded one of the 1 month, 3 month, or 6 month terms that I'm giving away for free. But you do need to send me your email. And by the way, the room will reopen tomorrow morning. We're going to be doing this tomorrow morning as well. Just tomorrow morning until noon. And if you found this helpful, you're welcome to become a subscriber anyway. All right, so there's the pullback into the lower prior highs, into that range, but from above now. It's a prior low. And that's the proxy window. 310, 320 is lapsing, entering that window from above, and at 320 back into that range. Now, back under it would have been more clear. Back under it would have been much more reliable, offered a lot more clarity. But the 320 bar hasn't even elapsed, hasn't finished, and we're still heading toward the lower end. So a deeper pullback to 57.38 may be underway. We still have a requirement. Nothing changes what we see when we look left. RSIs, 1 minute, 3 minute RSIs simultaneously overbought. There we go. Simultaneously overbought. RSIs at the high require an eventual retest. 57.46, 47. Being probed. I'm looking for 38, and then we'll assess. We'll stop and assess, but I would assume that's going to be a candidate for returning back to the highs. All right, the attraction to 38 is an attraction to 38.40. I'd still expect 38 more than 40, but 40 was really a minimum, and that's met. The bounce limit is 43. $43, $44. In any case, it's being overlapped. Same bars. Same starting point. So, same 3-minute high. Now, 38, the reaction up. Now that we've gotten to 38, there's 37.75. Target met. Now there's potential to reverse up. This is a spot to tighten. If you took this short, tighten stops, lighten exposure. Even consider reversing to long. You can always stop and reverse to short on a fresh low. Have a stop and reverse to short, or at least a sell stop on a long if you've already reversed to long. But this was my target at 38, and it's now met. Look at how 3-minute RSI has returned to the mid-range. 1-minute RSI has reversed all the way to oversold. Oh, they're not stopping. Bounce limit is 36.75. I'm not going to have any greater degree of confidence in reversing up, let alone the low being in, without probing back above a bounce limit higher than its first 3 minutes. Bounce limit is 35. The lower the bounce limit, the easier to produce a 3-minute high back above it. All we know is there's a requirement to retrace the high. The first reaction down off the previous trend's extreme was already corrected by 61.8%. This leg is entirely credible for being productive. It has been productive. But it is still the first reaction down from this uptrend. There's no topping pattern in here. This never produced an actual top. Maybe a descending triangle, but not an actual distributive top. So we do expect its retracement, but clearly the market's not interested in that at the moment. Bounce limit is 30.50. All right, pullback limit is 43. 57.43 pullback limit. The traction, the objective, maybe not in a straight shot higher, but the objective nonetheless is to retrace the entirety of this pullback simultaneously overbought RSIs at the high require a retest. This could develop all the way into the close. It's at least the attraction. And even if price never gets to the attraction, so long as there's an attraction and it's not overwhelmed by anything else, which this is not, one other obstacle, which is a different issue, but there's no lower attraction in play. So long as that's the only attraction, that's the market's initiative. Now there is an obstacle, and that is these two dashed lines. Remember, that is Monday afternoon's last consolidation. Slicing through it, was likely to come back and recognize it at least as support. Slicing all the way through that, likely to come back and recognize it as resistance. But we're relying on it being recovered entirely to get back to the high. That might not be sliced through. Pullback limit is 45. $45.75. I just had a question emailed to me. Let me go ahead and announce the answer. The question is, if you win, high hopes. I certainly appreciate the high hopes. If you win one of the 3 terms that I'm giving away tomorrow, do you have to start it at any particular time? No, you don't. I don't have any particular time that you have to start it. I would appreciate not letting it dangle out there indefinitely. If you want to give it to somebody else, you're welcome to do that as well. But if you're not ready to use it, that was the point of the question. If you're not ready to use it right away, but you want to use it, then you're welcome to delay starting that term. If it's a 6-month term that you win, the clock doesn't start ticking when I award it. I only ask just honor system within a few weeks or a couple months at the latest, I would assume, to go ahead and start using it. All right. Another pullback limit, another 3-minute low, and now another higher high. We're going to start the market wrap in just a minute here. All right, it is Wednesday afternoon and time for market wrap. Pretty interesting FOMC day. Right now, just to bring us up to speed, we've got overbought RSIs, simultaneously overbought 1-minute and 3-minute RSIs at the high. That requires a retest because that doesn't develop unless pretty much all available strong-handed sponsorship is behind it. So by default, if all available strong-handed sponsorship is produced simultaneously overbought RSIs at the high, as they were overbought all along the way, finally a reaction down, that's weak-handed sponsorship. Or, in other words, strong-handed buyers being patient and letting weaker-handed sellers isolate themselves, trap themselves. But in any case, it requires a retest. Also, this is an ongoing series of higher highs and higher lows, and no matter how extended it gets, no matter how big of a reversal maybe blindsides it or ambushes it, without some distributive process, it is not likely to launch a durable down leg. So my target on the pullback was 38. Singular leg overthrew it by quite a bit, but for only a few moments. And now presumably we're back on our way up. There's no requirement for the recovery to be done on any particular time frame or with any particular expediency. Right now we've got a 61.8 retracement back to the high. That's natural resistance. There's its counterpart at 44. And if we even measure the room for noise below that, down to 37.50, 33.50. Quite a range, but if given the opportunity to buy in this 33.50, 37.50 area, Not that it's targeted, but I would expect that to recover. Or said another way, that's how much room there is for noise before suggesting anything more substantial is developing. Everything else leads right back up to the high. So, as far as the session goes, and look, that is an intentional market. By the way, this late in the day, this near the close, lots of volatility, obviously in this huge range. Plan accordingly if you have a position. There's no mental stops in this kind of a market, this kind of a range, this kind of volatility. By the time conditions suggest triggering a stop mentally, price has already well surpassed it. You can always re-enter if whipsawed out. But this is pretty attractive long now into the admittedly wide 3350, 3750 area. Doesn't mean tolerate anything lower. Can always re-enter long or delay entering long until this has proved that it's capturing the dip in order to recover. I'd say here there's something else potentially going on that's a little more concerning. But now, having probed under 3350, I can say that 3750 is actionable. Just to give it a little room for noise, call it back above 38. The session, we left yesterday with this afternoon range that was so far removed, or just far enough removed from today's catalyst, this afternoon's catalyst, that as narrowly ranging as yesterday was congested, we were likely to see volatility start expanding ahead of FOMC. Got that overnight, got it intraday, and then this huge reaction up on Powell. Was a little slow coming, but it developed literally at the last minute. I was pronouncing it as right on the cusp of not attracting, just pausing too long, not attracting sponsorship, and it took off literally at the last available minute. So it's just as credible, but I'm not giving sellers any benefit of the doubt, maybe for a deeper correction. This just slid right through it, so really looking at this as overlapping 3350, 3750 with a requirement to retrace the high, simultaneously overbought RSIs, uptrend, first reversal down. That's not going to be a durable reversal. Let's just leave that at that. As far as the bigger picture, nothing about today's session affects the bigger picture. As expected yesterday, the defensive posturing that prevented a runaway market to the upside ahead of FOMC, that wasn't likely. So the defensive posturing, and now that's been corrected, so to speak. We're sitting right back at this bounces high. This could go either way. I don't have any kind of a hold long or hold short overnight. We're really going to have to see where tomorrow's open is greeted to have the next indication of if this intends to produce a bigger recovery, which I would expect to begin by gapping up above this afternoon's highs, or if this has now having encountered the FOMC events that the market put up stiff upper lip and expended a lot of buying pressure to weather and to absorb. Now that buying pressure already satisfied, already fulfilled, but now expended. Not unusual to see a quick dip that retests the lows, even if the intent is to form a more durable bottom. I think the more bullish scenario here would immediately retrace back to the lows, hold the lows, and allow a durable bottom to form. Of course, that would risk not stopping and just extending. But otherwise, bigger corrective bounce is possible. Remember, once we start getting above Monday's highs or high, we start getting into the proxy gap. Next higher objective, 57.93. That's the last opportunity for being just a shallow corrective bounce, still being in the orbit of the low. Start breaking above the proxy gap, above 57.93. And the actual gap, 58.30. Yeah, 58.30, the actual prior Friday's cash session close, 58.30. That becomes an attraction. And gaps tend to be filled in pairs. So if 58.30's gap is filled, the actual gap, then we start looking for 5900's actual gap to be filled. That gives us confidence to buy dips or reactions down. But in any case, right now, there we go. Right now, question is whether and when the retest of this afternoon's high is going to be met. It's much too far removed from the headlines for that to be weak-handed sponsorship, so it does require a retest. So let's just say that so long as if sellers don't take control overnight and extend this dip for whatever purpose so that the open is greeted deeper, not just correcting this up leg, but rejecting it back under whatever prior high it had to recover. It had to recover, for instance, just eyeballing this structurally, it had to recover this prior high. It's low, the lower end of that, consolidation 57.16, so I'll have some other levels in the blog, but so long as tomorrow's open isn't exited, the first 15 doesn't exit under 57.16, I'll assume that we're still in the orbit of this 57.70 high. And the potential then, compensating for the delay and the detour when we had gotten so close to it, we're tracing 61.8% of the way back up to it. Once that resumes its uptrend, not just holds 57.16 or avoids breaking under 57.16, doesn't have to be met. To hold it, just needs to be avoided. Resuming this rally, compensating for the delay and the detour, it wouldn't be in play, or it wouldn't be required, but 57.93's proxy gap would be a likely attraction. Otherwise, holding a test of 57.70 or just exiting tomorrow's first 15 at 9:45 under 57.16. In that case, I think we leave unfinished business above and sellers get control of the day. But let's see where tomorrow's open is greeted, or see at least what happens overnight. Tomorrow morning at the 7 a.m. strategy planner, we will take a live look. All right, any questions about any of that, please ask. As far as Bitcoin, so Bitcoin had come down to the precipice yesterday, 81.4, 81.7. Anything lower would have triggered the next lower target at 73.5, 73,500. Never triggered, and in the wake of all the news or in reaction to the headlines, got back up to 83 or 85.4.
bigger picture reminder that this is a multi-month chart. 85.4 was the next lower target that, had it been met a month earlier, could have served as a low. Instead, the delay probably gets us down to 73.5. And that outstanding attraction is why the dip to 85.4 has not been dispensed with too quickly. But today's bounce doesn't really indicate anything, not predictive of anything. Resistance at 85.4 remains intact. So, is there a sell signal that can be any higher that would start that break lower to 80 or to 73.5? There is. I really want to see the knee-jerk reaction absorbed, though. But at this point, if we just look at a 61.8 retracement of this range, just back under 83, there's room to 83 before suggesting that the range, now having returned to its upper end, is reversing down. Remember, these prices all equate to each other. They're all of equivalent value because they're all within the same range. We just happen to be at the upper end of it. Ethereum was lifting off earlier and has improved. Although Bitcoin's only returned to the upper end of its range, Ethereum has broken its upper end. Solana firming along with it. Looking at tomorrow's calendar, we've got jobless claims, Philly Fed. Philly Fed is the only Fed sector report that is influential to price action. OEI post-open, also reliably influential to price action. I don't see any scheduled Fed speakers, but they can pop out of the woodwork without a moment's notice. All right, we've got the cash session closed. Let me go ahead and calculate that in a moment. But first of all, not a whole lot of reaction in currencies. Gold trading up into my target, 3062, long-standing target, 3062 plus, big decision point. Having done so relentlessly, remember 5-6 weeks ago, the market was at a decision point. Was it about to enter a multi-week correction, or was it going to continue on in a parabolic rally to 3,300? And it gradually, or soon, but gradually told us pullback, correction. The correction ran its course of multiple weeks. The rally has resumed. Parabolic rally to 3,300 is off the table, but even a recovery above 3062 is a little questionable when there's not a lot of correcting going on along the way up. There's a proxy gap back to 3020. If 3062, 3070 isn't exceeded through the close, there's that attraction to 3020, and then its resolution will be telling. Silver, meanwhile, just still fluctuating in the range. Long bond. You can see why I don't have anything compelling, no compelling patterns with the bond right now. And then crude oil, firmer, even though not last night, but the two prior nights, Sunday and Monday nights, each tried and failed to maintain probes above the 6830 buy signal. So it's not uptrending support break that reverses the trend down or resumes the downtrend. It's a break under its last touch. The trend line's last touch is right here, about 66.40. Anything lower resumes the decline to 64.45. All right, so cash session close. $57.31 cash session close. We do have a fresh high in here. And multi-session price action that allows for it to be relevant. What happened to the fresh high? It wasn't maintained. So that is, you're correct, it's passively bearish. Bearish because it tried and failed to break higher. Not actively bearish, which would have been a break under support through the close. Passively bearish. So this tells us nothing about tomorrow and nothing about Friday morning. But Friday afternoon's proxy or PM bias window from 120 to 230, if it is exited lower than it's entered, in other words, also bearish. Doesn't have to be passively bearish. It doesn't have to fail a test of anything. It doesn't have to break lower or maintain the probe above resistance. Very simply, exit the PM bias window lower than it's entered. So, to serve as a complement to this passively bearish input, the WEDX indicator, Wednesday expiration indicator, doesn't have to do that. We might get conflicting signals, which means no signal at all. But if we do get confirmation, bearish confirmation, then we will also expect Monday morning to trend down. Interesting setup. But nothing else relevant about it between now and then. Meanwhile, no hold long or hold short. I would not be averse at all to buying any overnight strength. The expectation being to retest today's high. Oversold RSIs can be neutralized. That's an attraction that requires being tested. It can be tested overnight and neutralized. It doesn't have to be tested intraday. But just because there's that attraction doesn't mean we extend straight back up to it. That is not required. We could be looking at this from a lower level tomorrow morning. So meet back here at 7 a.m. Thanks everyone for being here. Have a great night. Take care. All right. Evidence to buy dips. Three's proxy now having returned to its upper end is reversing down. There's a proxy gap in any case right now. This up leg, but rejecting it back under whatever prior high, and the potential then compensating for the delay. Play. Take a live look. All right. Any questions about any of that? Please ask. As far as the next lower target at 481.7, anything lower. So Bitcoin had come down to the precipice yesterday.